Vegetable prices were hammered last week, tomato prices collapsed, and while fruit markets are holding for now, the next few weeks could change everything. This Fresh Produce Market Report is proudly brought to you by Villa. With world-class solutions like Masterlock specifically tailored for South African conditions, Villa helps you improve spray deposition in permanent crops and increase productivity with research-backed confidence. Villa, science, solutions, success. Just a quick reminder, 81% of the people watching these updates aren't subscribed yet. Please double check if you are. It's completely free and it's the easiest way to help us grow and keep this content going. Your support really does make a difference, and in a real way, you're part of our company and helping shape the future with us. So thank you for your support. As expected, vegetable prices dropped sharply on the back of weak demand. Potatoes fell to 50 Rand 2 cents per 10 kg, with quality becoming a growing concern due to heavy rain and extreme heat in harvesting regions. With schools reopening this week, demand is being drawn away from fresh produce markets and prices are expected to remain under pressure in the short term. However, prices could start picking up slightly towards February. The average price is now 36% lower than a year ago, which can demotivate some producers to plant. My feeling therefore is that we can see a better second half to 2026 in terms of prices than we had in 2025, just due to low production. Tomato prices dropped 37% to 5 Rand 4 cents per kilogram and are now 41% lower year on year. Weak demand will likely keep the market under pressure this week, but rainfall in the north will be the key driver. Any drop in volumes or quality could result in a quick price correction. There is already evidence of bacterial speck in the market, while Saladette tomatoes remain scarce and are trading at a premium at the moment. Onions remained stable at 47 Rand 56 per 10 kg and are starting the year slightly stronger than last year, with prices about 7% higher year on year. While prices are still not attractive to producers, I do expect gradual improvement towards May, especially if hot and drier conditions persist in major production areas. Carrots dropped 21% to 5 Rand 89 per kilogram, but prices remain about 8% higher year on year as volumes are still 11% lower than last year. Peppers fell 39% to 11 Rand 4 cents per kilogram the past week, and cabbages dropped 18% to 2 Rand 15, showing clear signs of January demand fatigue. Sweet potatoes jumped by 25% to 5 Rand 92, while spinach was the other only winner of the past week, increasing by about 19% to 3 Rand 65. Butternuts dropped to 3 Rand 89 per kilogram, pumpkins dropped to 4 Rand 21, green beans slipped to 8 Rand 43, cucumbers fell to 9 Rand 24, and garlic traded slightly lower at an average of 46 Rand 56 per kilogram. Local garlic traded of 42 Rand 34 and imported garlic of 56 Rand 98 per kilogram. On the fruit side, we are seeing that lower supplies are coming through, supporting most of these markets at the moment. Bananas jumped to 10 Rand 15 per kilogram, even though packhouses started up after the festive season, resulting in 32% more weekly volumes. I, however, think that we can see lower prices over the next 2 weeks for bananas as more volumes enter into the markets, driving these prices downward. Apples jumped to 13 Rand 25 due to limited supplies. I think that we have about 2 weeks left before the apple price can peak and start trending downward again. Pears also increased last week, trading on 10 Rand 61, but this market can come under increased pressure now as volumes already started to increase. In the citrus market, oranges gained 9% to 11 Rand 66, lemons increased to 7 Rand 53, naartjies dropped to 7 Rand 51, while grapefruits jumped 65% to 13 Rand 73. Avocados also jumped to 31 Rand 60 per kilogram and is also likely to start trending downward from here on out as the volumes start to ramp up. Table grapes dropped to R19.75, pineapples dipped to R9.31, while watermelons traded 49% lower at R1.67. Blueberries were the standout again, jumping to R122.31 per kilogram, which was driven by tight supply and strong niche demand. As schools reopen this week, a noticeable portion of household spending shifts away from fresh produce, and that typically keeps short-term demand under pressure. Producers should therefore not expect an immediate price recovery, especially in vegetables. The focus over the next few weeks should be on quality management and delivery timing, as weather-related losses could quickly tighten supply in certain lines. Markets that are currently oversupplied may remain weak, but where volumes or quality start slipping, prices can correct fast. Looking further ahead, lower planting intentions, especially for potatoes at these price levels, could set the stage for firmer markets later in the year, making the next few months critical for production decisions. This weekly Fresh Produce report was made possible by Villa. Thanks for joining us today.